So, the big takeaway, two big takeaways for me. Number one is the support area that I saw forming up, and it was only a couple of hours old. It was just right there. Was a key factor, and then of course the reports were also a key factor. I think that the reports are a bigger one even than the support level over here. So then let me go down to a 15-minute bar and I'll take a look at what actually happened here. And this is something that I'll review more for a trade that I'm going to be watching or observing as it's moving in the marketplace. And this doesn't apply if I'm just looking to place an order, but this is something important to keep track of what's going on so that I can catalog it, so I can keep it in my mind. And this is the way I look at this stuff. I want to look at what went on here, and then make a conscious effort to keep that in my mind, so when I see a similar pattern in the future, I can react that much quicker. So had I been looking at this particular trade, the first thing I see here is that the market is making its breakout before the sweet spot. You can see there's the 3 o'clock hour, which is right here. Pardon me. This actually is about 3:15. But you can see there's the beginning of the sweet spot right there. So the initial breakout happened prior to the sweet spot. This is more in the European Open, which can be fairly muted. Also, I see that momentum immediately turned down. So then once the market broke above, you see the momentum continue to the downside. Now, a big takeaway for me is when the market breaks through this kind of support, you can see for about an hour this 2025 was support. When it breaks through immediately after I get in other words, if here's the high, and I'm thinking to myself, I'm gonna go long if the market breaks above this high. It breaks above the high here, but then immediately turns around. This is where I want to exit. I want to exit once the market shows that there's momentum and shows that it's going to be moving to the downside, because I don't know if the momentum is going to continue or if the market is simply going to reverse. The important thing here is that I want to do this only if this happens on the very next bar. So if I get in on this bar here, but then momentum immediately turns around, that's where I want to get out and wait. And sure enough, you can see the market finds support again, gives a 3-bar reversal trade above this high, and you can see once the market triggers the high, look at what happens. The closes immediately start moving up. And this is what I want to see. So the next takeaway is that's the momentum that I want to see. I want to see closes moving up. I don't want to see that the closes immediately start moving down. And then I can see that the next big takeaway that I can see is when the market doesn't follow through here. You can see it made a high, it came down, made another run at the high, and you can see it's just not following through. I can see that this is probably going to be an optimal area to get out of the market. Sorry for the pause. I just saw that there was a news announcement that came out, and I wanted to observe what was going on. It was the Chicago PMI. The move is fairly muted, but so anyway, those are the big takeaways from this trade. But the big thing is, remember that taking a losing trade is simply part of the business. The best thing to do is to observe what goes on, get your own takeaways from the trade for yourself, wherever your entries were, wherever your stops were. That way, in the future, your trading business can become more profitable.